Hello everyone, and welcome back to Explain the Charts. Today is November 11th, 2025, and we are doing an in-depth analysis of one of the market's biggest names, Apple, ticker symbol Apple. The stock is currently trading just shy of its all-time highs, so we're going to break down the latest news and then dive into the charts to see what might be next. First, let's cover the current events shaping investor sentiment. The news has been overwhelmingly positive lately, with Apple reporting a record-breaking September quarter, beating analyst forecasts on both revenue and earnings. The company also issued very strong guidance for the upcoming holiday quarter, predicting double-digit revenue growth, which would make it their best quarter ever. Much of this optimism is fueled by strong early sales data for the new iPhone 17, with some analysts predicting the holiday sales expectations are actually too low. Beyond hardware, Apple's services division continues to be a powerhouse, posting all-time record revenue of over $28 billion. Perhaps the biggest long-term catalyst discussed is Apple's emerging AI strategy, specifically the reported deal to power a massively upgraded Siri with Google's Gemini model. This has led analysts at Bank of America to reiterate a buy rating, raising their price target to $320, calling Apple an eventual winner in AI at the edge. However, the picture isn't entirely rosy. Despite the strong performance, many analysts still consider the stock expensive, with a high P/E ratio and valuation nearing $4 trillion. There are also lingering concerns about product demand, particularly in China, where sales saw a temporary 4% dip in the last quarter, though Tim Cook expects a return to growth. We've also seen reports of delays for the next-gen iPhone Air, citing a product rethink. The broader market context is also shaky, with jitters over AI valuations and a potential economic slowdown, which could cap upside in the short term. This mix of strong fundamentals and valuation concerns creates a fascinating setup as we turn to the charts. Let's start with the big picture on the daily chart. Looking at the daily chart for the past year and a half, we can see a clear and powerful uptrend. The stock experienced a very sharp sell-off in early April 2025, finding a significant bottom around the $169 to $172 level. That low point has established a major long-term support zone for the stock. From there, we saw an aggressive recovery rally that has carried the price to new heights. Another notable event was the large gap down in early August, where the price dropped from around 220 to below 200 on heavy volume before recovering. That gap-down area around $200 could now serve as another key psychological support level on any significant pullback. The price action culminated on October 31st, when the stock surged to its current all-time high of $277.32. This move directly correlates with the release of Apple's stellar Q4 earnings report and its optimistic forward guidance. Since hitting that peak, the price has pulled back slightly and entered a period of consolidation, currently trading around the $269 mark. This sideways movement suggests the market is digesting the recent gains and weighing the bullish news against the valuation concerns we just discussed. Let's zoom in on this recent action to get a clearer view. Focusing on the period from early October through today, we can see the powerful rally into earnings. Notice the candle on October 31st, the day the all-time high was set. It has a very long upper wick, which indicates that while buyers pushed the price up aggressively, sellers stepped in and pushed it back down, leading to a close well off the highs. This is a classic sign of profit-taking at a key resistance level. Following that peak, the price has been trading in a relatively tight range for the past week or so. The bottom of this range, around $267, is acting as immediate short-term support. The price is currently coiling in this zone, building energy for its next move. To get an even better idea of the short-term battle, let's switch over to the hourly chart. On the 1-hour time frame, this consolidation is much clearer. We can see the price action has been largely contained between $267 on the low end and about $273 on the high end. The high of the last trading session on November 10th was $273.73, which serves as our immediate upside resistance. A sustained break above this level would be the first sign that bulls are regaining control and want to retest the all-time high. Conversely, a break below the $267 support level could signal that sellers are taking over, potentially leading to a deeper correction. Let's quickly look at the 15-minute chart for the last trading day to see the intraday action. Here on the 15-minute chart from November 10th, we can see the battle play out. The stock saw a strong push higher in the morning, rallying from an open near 269 all the way up to that 273.73 high. However, sellers stepped in again at that resistance, and the price faded throughout the rest of the day, ultimately closing back where it started, around 269.43. This price action creates an indecisive candlestick on the daily chart and reinforces the consolidation theme we're seeing. Traders are clearly looking for a new catalyst before committing to a direction. Now let's go back to the daily chart to summarize our findings. So, to recap the key levels and potential scenarios for Apple. The ultimate resistance to watch is the all-time high at $277.32. Short-term resistance is the recent high around $273 to $274. On the downside, immediate support lies at the bottom of this consolidation range, around $267. If that level fails, the next major psychological support is at $250. Further below, we have support zones around $225 to $230 and the $200 level from the August gap. Now for our unbiased predictions. The bullish scenario, which I believe has a 70% probability in the medium term, is that this consolidation is a healthy pause before the next leg up. The fundamental catalysts of strong sales and the AI narrative are very powerful. A break above 274 and especially a close above the all-time high of 277.32 on strong volume would reinforce this and open the door to analyst targets in the $280 to $320 range. The bearish scenario, with a 30% probability, involves the stock breaking below the $267 support. This would likely be triggered by broader market weakness or specific negative news for Apple. Such a break could see the price fall to test the $250 support level fairly quickly. Things to watch for will be the upcoming holiday sales numbers, any concrete news on the AI-powered Siri, and the overall health of the tech sector. Thank you for joining us on Explain the Charts. Before we go, a quick disclaimer. This video is for educational and informational purposes only and should not be considered financial advice. You should always conduct your own research and consult with a financial professional before making any investment decisions. If you found this analysis helpful, please hit the like button, subscribe to the channel, and we'll see you in the next video.